Welcome to presentation on Kotak Mahindra Bank. Growing in its market price and capitalization over a long period of time, Kotak Mahindra Bank was the first NBFC to be converted into a bank in 2003. It acquired ING Vysya in 2015 and today the third largest bank after HDFC and ICICI in the private sector. Market cap of 3,50,000 crores and a return of 21% over last 5 years. A consistent growth in its deposits quarter on quarter, along with increase in advances commensurate with the deposits, and a CASA percentage growing quarter on quarter quite substantially, and deposits over a period of 2 years have grown by 11% CAGR and advances have grown by 4.3%. Kotak Bank has net interest income as one of its strong components, rising from 6,863 to 15,340. It has grown by almost 17% on a 5-year basis. And this has helped the company to get a better profit before tax from 1516 3,124 to 9,303 in 2021, a growth of almost 24% on a 5-year basis. And based on this net interest income and control on expenses, PBT has moved up along with ROA and ROE, and company has got a comfortable capital adequacy ratio. Surprisingly, with Kotak, retail banking contribution to standalone profits is on the decline, while corporate and wholesale banking is contributing almost 60% of the standalone profits of Kotak Mahindra Bank, and treasury on its part is contributing about 32% of the bank's profits, and this is quite significant, and a falling profit contribution from retail is rather disappointing. We come across two concerns in respect of Kotak Mahindra. One is the gross NPA, which has risen to 7,400 from 5,000 during the previous year, and provisioning, which covers about 2/3 of it, and GNPA percentage has shot up to 3.32% and the coverage coming to 64%. Both the GNPA percentage and the coverage are a matter of concern. For the financial year 2021, PBT of 9,303 sequentially shows a growth of 19%, which is misleading because it is being compared with a lower base of FY 1920 7,805, and Kotak has always had an annual growth of around 20% plus from 2017 onwards, and that way growth of 19% is just normal, nothing special about it. Coming to June 21 quarter, if we take the profits sequentially, they are lower than the March quarter figure, which once again was falling from the previous quarter of December 20. And as compared to the previous year, same quarter, we cannot have a comparison for the simple reason last year was a bad quarter, and year before, June 19, is a figure almost similar to it, 2000 plus. And that way, performance of June 21 is nothing great to write home about. In a consolidation with subsidiaries, Kotak Bank contributes almost 70% of the group profits, with balance 30% coming from 6 major divisions. And this year in Q1, unfortunately, reliance on Kotak Mahindra Bank has increased from 70% to 85%, as insurance section has reported a loss of 243 because of COVID as against profit of last year. And this is in spite of the fact that company's other broking subsidiary AMC and investment banking are doing quite well. During the last 12 months of share price movement, one thing becomes more clear, that starting November, whatever gain was registered by the share was lost in the subsequent months, and the return came to only 25%. And we can understand this better by comparing with the competition. Watching competition along with the Bank Nifty, HDFC 42%, ICICI Bank 82% return 12 months, Axis 58%, and Bank Nifty 53%. And from now December onwards, falling Kotak has given a return of 25%. Among all the fraternity, what is the reason for Kotak to fall down? And there is also a descending channel on the regular chart. Kotak Bank is suggesting a descending channel moving downwards within a specified range, although there is an upward movement being seen now, but the movement is well within the channel. Dilution of promoter stake and the tussle with the RBI has worried Kotak from 2006, when it was supposed to reduce stake to 49%. In 2008, RBI referred to 2005 ownership rules and talked of 10% as the stake, and Kotak kept the non-compliance on till 2017, but in 2018 it issued preference shares to show compliance with the RBI, which was promptly rejected, and Kotak moved court. But in 2020, both RBI and Kotak reached an understanding, and promoters agreed to do the stake sale and bring down to 26%, and RBI caps the promoter stake at 15% voting rights. And in 2021, RBI sprang a surprise. It capped the tenure of MDs, CEOs and whole-time directors to 15 years, which affects Kotak badly, as its CEO will be retiring on 1st January 24, and so also its joint MD a day before. And Kotak is faced with a transition challenge in less than 3 years. And this appears to have affected the market sentiment, acting as a overhang to valuation. Moving High Court and the publicity therefrom hurt Kotak more than RBI, although Kotak informed the court of the arbitrary and unfair action from RBI without authority of law. RBI filed in its case that Kotak has been willfully non-disclosing, which is a criminal offence under the Act, and it also accused them of unjustified defiance of the regulatory authority, and that led to a settlement between the two, and they agreed for a dilution and capping of voting rights. It is quite surprising that after a QIP, when the promoters offered their shares in an open market sale to the extent required, it was expected the share price will react, but there was absolute indifference to the entire goings on, as the volatility was not visible even months after the transaction, and that is quite enigmatic. Viewed from the shareholding pattern, Kotaks have another problem on hand. Their shareholding is 26%, but the voting rights capped at 15%, and FIIs, mutual funds and institutional investors, domestic, hold in aggregate about 56%. And with 56%, with institutions and promoters being capped at 15%, business flexibility and decision making could be a tightrope walk, and that is a matter of concern. Kotak Mahindra Bank, quite a formidable bank, one among the big three in the private banking sector. Its performance has been quite effective with solid profitability figures and also growth numbers. It is a group driver so far as the group consolidation is concerned for the Kotak, forming about 85% in the recent quarter. Promoter stake dilution was an hanging issue which has been sorted out with the RBI recently, but there is a risk of transition because of the cap on the tenure of key executives. But with all good performance, Kotak didn't get the attention of the market as the market ignores its performance. But the company has got robust segments and world-class organization practices. Hope you liked the presentation. You can access similar videos at InfoCard on Stock Learning Simplified. We look forward to your like, share and comment. If you are visiting the channel for the first time, may you please subscribe and press the bell icon for timely intimation on forthcoming videos. Thank you so much for your time, attention and support. A disclaimer: the purpose of this video is information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. May please seek the advice of a competent professional based on your requirement.